I have breaking news to share with you today. The United States economy is changing. Top economists have proposed a new plan for the Federal Reserve to actually cut interest rates in the new year. This could benefit millions of Americans, and many will also be surprised by bonus refund checks from their state. My dear friends, please make sure that you watch until the end of this video to hear about all of these details. Also, friends, in a video later today, I will be announcing several winners for the Walmart gift card giveaway. If you would like to enter the weekly giveaway, friends, all you need to do is click and like several of my videos and then comment below the keyword of each video that you watch. The more videos that you comment on, dearest friends, the greater your chances of winning these giveaways.
A gentleman from Maryland talked about the number of IRS employees going down and the amount of money they manage going up. We had 2,000 IRS employees eliminated. Their jobs were eliminated in my district. And in some sense, we were sad to see those go, but then I realized why they were eliminated. They worked in a 23-acre complex, a flat-top, single-story building that took up 23 acres of Covington, Kentucky. Now, why did they build the building as one story? Because they were pushing paper carts with tax returns on them for 50 years. And there was something called the computer that was invented. And people started doing their taxes on a computer. They would print them out and mail them, but they would still have to enter in all of that stuff manually. And then something else came along called the internet, where you didn't have to make a manual copy of your tax form. You could send it from your computer to the IRS's computer. And something amazing happened. We didn't need 2,000 jobs in my district. We didn't need a 23-acre complex with a single-story building. And that's where 2,000 of those jobs went. And those employees, I'm sure, are doing something more productive now than pushing paper around. But I think that's just something that we miss when we talk about, well, we've got fewer people managing more money. That's what computers allow you to do. And also on enforcement. The enforcement gets a little bit easier. It's kind of hard to track a paper trail sometimes, but when it's all on computers, as many of us learned the hard way with social media, it never goes away. And it's a lot easier to track. But that was the only point that I wanted to make, that we can cut, and we can cut at the IRS, and we can do things more efficiently, and that's what's happened in my district. And I yield back.
Would the gentleman yield?
I would yield to the gentlewoman from New Mexico.
So I think that those are really great points. I guess what my concern is that when I look at this bill, it also cuts modernization. And so because we do need to move to those places where it is more modern, where it is more secure, that would be one of my concerns, is that we are not modernizing, and we need to modernize, including making sure that, regular taxpayer can file their taxes for free. So that I think that's a good point, except for it's missing that we're cutting the modernization money.
Now, friends, the Federal Reserve is set to begin a new year after it signaled that a momentous shift in monetary policy is underway, amid signs that high inflation is finally beginning to ease. During their final meeting of the year earlier in December, central bank policymakers signaled that a nearly 2-year battle against inflation is finally coming to an end in a long-awaited policy pivot. In addition to holding rates steady for the third straight month, Fed officials forecast a series of interest rate cuts in 2024 as inflation falls faster than expected. Chair Jerome Powell told reporters after the meeting, "We are seeing strong growth that appears to be moderating, and we're seeing a labor market that is coming back into balance by so many measures. These are the things we've been wanting to see, but we still have a ways to go." New quarterly economic projections show that a majority of Federal Open Market Committee officials expect rates to fall to 4.6% by the end of 2024, suggesting that there will be at least 3/4-point rate cuts next year. Policymakers also penciled in additional rate cuts in 2025 and 2026. But traders are betting on even more aggressive rate cuts, starting as early as March, despite recent efforts by Fed policymakers to temper expectations. About 88% of investors are currently pricing in at least a quarter-point cut in March. If inflation continues to fall faster than expected, hiking interest rates tends to create higher rates on consumer and business loans, which then slows the economy by forcing employers to cut back on spending. Higher rates help push the average rate on a 30-year mortgage above 8% early this year for the first time in decades. Borrowing costs for everything from home equity lines of credit, auto loans, and credit cards have also spiked. In the span of just 16 months, interest rates surged from near zero to above 5%, the fastest pace of tightening since the 1980s. While inflation has cooled considerably over the past few months, it remains up 3% compared with the same time 1 year ago. Even with the recent declines, Americans continue to pay more for a number of necessities, including food, utilities, medical care, and rent. Yet the rapid rise in rates has not stopped consumers from spending or businesses from hiring. So, dear friends, what are your thoughts on all of this? Do you think that our economy is improving? Please let me know in the comments section below. Also, friends, in the state of Colorado, there is some important news. One outcome of Colorado's special legislative session is that taxpayers will receive equal Tabor checks in the next round of refunds. Colorado lawmakers were called into session to deal with property tax relief after voters soundly rejected Proposition HH. The measure would have raised the state's revenue cap in exchange for a property tax break. It would have given taxpayers a one-time, equal refund under the Taxpayers' Bill of Rights and potentially eliminated the refunds in the future. But instead, lawmakers took up these issues individually, passing property tax relief and approving equal Tabor refunds for Colorado residents. Tabor puts a cap on how much tax revenue the state can take in and requires a surplus to be refunded to taxpayers. Historically, Tabor checks have been issued based on income levels, but lawmakers have once again decided to make these payments equal across the board. So that means higher earners will see lower Tabor refunds than expected, while the state's lowest earners will see a few $100s more. For the next round of refunds, it's estimated that approximately $3.28 billion will be returned to Colorado taxpayers. Split equally, the next Tabor checks would be about $847 for single filers and $1,694 for those who file joint returns. Well, my magnificent and most marvelous friends, that is the end of my daily stimulus update video for today. Dear friends, thank you so much for being part of this community. In a video later today, I will be announcing several winners for the Walmart gift card giveaway. If you would like to enter these weekly giveaway, friends, please click and like several of my videos, and then comment below the keyword of each video that you watch. The more videos that you comment on, friends, the greater your chances of winning these giveaways. Thank you, and have a wonderful and very blessed week.